Okay, what's going on? Good evening. Good evening. This is going to be the daily recap for Monday, June 22nd, 2026. This is going to be the buy position that I gave out inside the Discord, inside the premium group this morning. People were definitely able to catch this move. I'll show a couple of other people's entries. Now, this is exactly our entry on the trade. These are the 7 things that I personally like to look for inside of a high quality buy long entry. One being the trend context, right? So being the higher time frame context. So we went over, the weekly, daily, H4 time frames of MNQ, right? And we also went over some higher time frame dollar index and what we wanted to see, and obviously U.S. oil. And then identified, where people were sitting from the overnight on the 15.5, which I'll go over as well. And then talking about, where the sheep were basically stuck. So something that we look for is W's and M patterns, where people basically will come down into an area like this. They'll hit their risk, they'll hit their area, hit the area again. They'll put their risk here, and then they get wiped out later, and they don't know why. Right? We definitely know why. Okay. So step 3 is looking for those sheep. Right? Now I'm gonna tie this all in together and the timing. We like to look for specific things when it comes to timing. First 15 minutes of the hour, last 15 minutes of the hour. I like trades that happen in 5-minute closes inside of those kill zone windows. Okay. Now, once we've identified where the sheep are, we want to see the liquidity grab, right? So step 4 is really one of the key parts of it, because most retail traders and most traders online are getting stuck in this exact trade. So in that liquidity grab, which is here where they take the sheep's price, right? Most people get in on that 1-minute trade, 30,790s back up, right? So like right in here where they get stuck inside those 30,830s, like 840s, right? To then get the same target. Now, what I like to personally wait for, right, is for price to liquidity grab, price to mark up and trap players in the FOMO. And I like to wait for step 6, right? Step 6 is going to be the break of structure, where price is confirming not only on the 1, but also on the 5-minute time frame that price wants to continue higher. And now this is something I talked about with an individual from the premium on a one-on-one call tonight, is you want to be buying when the markets are crashing, and you want to be selling when the markets are taking off, right? And so most people are getting stuck buying in situations where they're buying when it's taking off, right? And they're late, right? And then that's when they get warped, because they're wanting to be they're usually buying at a breakout or something like that. Now, after step 4, right, which is the liquidity grab, we look for step 5, which is the markup, so people to get stuck in the FOMO move. Then step 6 is very important, because that's where the break of structure happens, right? That's where we start to understand where's our risk, where's our entry going to be, and what time is it, okay? So now step 7, when you look for mitigation / the retest of the break of structure level key area before entering long, you want that to be in the first 15 minutes of the hour or the last 15 minutes of the hour, okay? So that was the trade that we took today. These are the 7 steps that I really focus on. I'm going to run you guys through the timing of the trades. So now you can kind of see here as well, when you go into some of the live trading chat, we took this all together today in the Discord. I think Chad had a really, really nice entry. He had 30,822s. I think most of our entries were somewhere in there to like the 30,813s is what he had here. Sorry, that's where he had trailed his wrist to already in profit, which is really nice. So we were looking at the 30,810. So basically what we were looking for was to buy our price below New York Open, right? Looks like Chris had an amazing day, 5-hour day already by 9 a.m. Looks like Amanda did pretty well as well. And then I talked with Josh just a minute ago, right? He took the same order, really, really good trade here. 5-minute location, 30,808, right, for the entry. So again, something that we're looking for on this is being below New York Open. And today's New York Open was 30,822. So beautiful order there, beautiful location, and a great target going for that new high where sellers would have been trapped right above that 30,908. All right, so people found the move, right? It wasn't just me, right? I didn't just call it out. There was people that took this move. And so now I'm going to walk you guys through the setup, right, that I like to see here, okay? And I'm going to go through the 1-minute and the 5-minute setup together, okay? So let's go over here. I'm not going to go as much through the higher time frame breakdown, but I guess I will. Okay, I guess I will. So looking at this, right, I do kind of have a lot going on, but just looking at this very briefly here, 1 hour and 15, what we are wanting to see, equities open. This is 7 a.m. going into 8 a.m. right here. So all we could see was this. What I was wanting to see was a bullish continuation, right? And I wanted to see if price could reach through the 30,000, 31,000 level, 30,975. So just basically wicking through this H1 area. And so the reason being was because we had a lot of tension in the on the weekend when it comes to oil, right? And we were seeing oil prices just tank off to the downside and already taking that last week low here. This is 8 a.m. going into 9. Like we were already reaching for last week's low. So as oil was continuing to make its way to the downside, I wanted to see more upside when it comes to our NQ. Okay. And so when you look at it from this perspective, like I said here, we wanted to see that upside and I wanted to see them deliver that liquidity. Now, I also said this, if we got to this area, basically this supply here, so this blue box zone here, 30,900, on small time frames, they're going to trap people, right? Noobs buy tops and sell bottoms, so they're going to trap people inside this zone to buy way too late, opposed to like where New York Open was. And so the only order that I wanted to take on a bullish continuation was if I was going to be buying below the open in bullish conditions. Okay. And so for us today, I'm going to show you guys the trading view, and then I'm going to show you guys as well the TradeZeller recap replay mode of it because it shows the exact entry. So I can show you like a little bit of exactly where we took it here, but then I'll show you the exact entry. Same thing I'm going to show here, but it's going to show you the exact entry from my data over there on TradeZeller. Okay. And so, cool thing that we wanted to see, like I said, we wanted to see bullish price action. We wanted to see confirmations of timing, and we wanted to see confirmations of price. Okay. And so, one of the first things they did, right out the open here, 15 and 5, right? We're looking at, let's go to 5 minute, 1 minute here, and really look at this price and dissect it. When you look at the overnight price, okay, that was one of the main things first. The overnight players, okay, from the lows, most likely they're not playing below previous day lows. I would say most players are probably in those 30,500s, right, on the overnight buys. So most people are up coming into the equities open almost 300 handles, right? So in order for them to take a profit, they're most likely looking for old highs, right, where they're setting limits or breaks of structure to clear areas to see, signs of strength to go higher. Okay. And so when you dive back into the New York Open, right, equities open, what I really like to focus on is that how the price moved in the first 15 minutes. Now, when you go and you look at the 5 minute and the 1 minute here, the very first 5 minute opening of the equities open was manipulative. Okay, so let's go to the replay mode here and look at this. That very first 5 minute candle, as you can see here, what they did was they ended up pushing up really fast in the first 5 minutes and then they went down lower, right? So they created a 5 minute wick, so a draw on an 80 level liquidity, and then the candle closes lower low, showing signs of weakness. So it's just trapping people on like 1 minute plays to the downside, okay? And so for me, what I was starting to see at this point on the 5 minute was we got that first 830 to 835 close, and then the very next candle, 35 to 40, just rockets, right? So you're looking at this candle right here, okay? And this is where I talk about the FOMO, right? This is what sets up the RSV model, okay? Because price structure, where you're at, supply, demand, all those things are going to be in factor. Now, there are also going to be things you have to look at intraday. So what I mean by intraday is like these smaller time frames that are in alignment with point of interest. Now, right here where most people get trapped is they take the trade on the first run up. So like when you see this first 5 minute run up, right, 35 going into 40 central time zone here, most people take this and they don't follow the rules, right? They don't put themselves in 5 minute location. They take trades on buys when the market's running up and not when it's crashing, right? So they're doing the opposite. They're doing what the masses they want you to do. So in this situation here, let's say you would have taken a buy position right on that first run up, because it's not a bad trade either, right? You got the sign of strength, you have a dump candle, nice level here at 30,800, good fill, okay, right? And see that it comes up inside the 5 minute demand candle, which is what I teach, right? First run up, right? I like to come in on a position like that, risk, like for a 3R, like a 5R zone, getting above that first, 1 minute, 5 minute high would be a 5R zone. So you got to know to take profit, especially in the first 15 minutes, the first opening range. You really want to be protecting capital or like really just securing the bag, right? However you want to look at it, okay? And so that first candle goes up, and this is where, like I said, a lot of people get trapped because they take the trade usually probably here late, they get the TP to deliver, where they get a little bit of a push higher and they think, oh, okay, I'll just hold on to this break even, and it comes back and breaks them even. It's because of their location on 15 and 5. Okay. And so when I'm going through the trade here, and I'm going to go pan over here really quickly. When I'm going through the trade on TradeZilla, right, this is the 1 minute. Now I'm going to just go to the exact moment when we took the trade. As you can see here, this is the very first fall. This is equities open, right? So equities goes up. This is going to be 831. This is 832, 833. Now, a lot of people get trapped in selling this 1 minute type of play, but I'm very patient in those first 5 minutes to see the trap, okay? And so right here, a lot of times, this is where people say, shit, I missed the 1 minute demand, or I missed that zone under 800. I want to get in now, and then price will go a little bit higher and then comes back and breaks them even. So like, for example, what I'm saying is they'll enter off of a position like this now, right? 20-point risk here, okay? And then they'll be shooting for that 3R a little bit higher, and then price will come up and deliver this high, right? And maybe come close to their TP, but because of where they're at now, they're like, okay, well, it's going in my favor a lot. I might as well go break even, and then price will roll over it. Maybe hits their TP, or sometimes it won't. Like maybe they entered a little later, right? Like closer to the break, and then it starts to turn over on them, and they have their risk at this most previous low, and they get stopped out. They don't know why. It's because of their location of where they chose to take the trade, okay? And so, as you can see here, we've seen the price action close higher here, which was that new high, showing that sign of strength, and we have a new range on the 1 minute. And so I'm essentially at this exact moment, right, calling out inside the Discord, hey guys, we're getting ready, okay? We're getting ready for price to come back below New York Open and to come back into the whole level 800 and come back into our 1 minute special area, okay? And so price comes back into that area. Now, the other thing I'm thinking about when I'm thinking about those 7 things that you see in the very beginning of this video is I want trades and the transitional moves to happen in the first 15 minutes of the hour or the last 15 minutes of the hour. That alone will increase your win rate, okay? And so price comes into the area, right? Rejects out of the area, and then we finally get the sign of strength out of it, and bam, we enter. Price is inside of our demand area. We have a clear target. Price is making higher highs and higher lows, right? Structure is bullish, right? And we know people came in and shorted these highs with no clear confluence of higher time frame context, okay? Now, when you look at this as well on a 5 minute, okay, this is a beautiful entry, right? I talk about a lot about 5 minute demand locations with prices that close higher like this. And so we entered here and we were looking to exit at this point here, okay? And so exactly how I explain it is exactly how, we like to take that order. Now you can see my order is at 30,808.50, which is right below New York Open, which New York Open is 30,822. So buying in bullish conditions under opening price, right? Very key, okay? Okay, so just broke down that order and where we entered. So just to kind of come back and show you guys here, right? This is where we ended up entering. This would have been 45. So this was right here, and then we entered at 808, okay? And so now, this is the same thing. You got the 5 minute sign of strength close. You're waiting for the correction move back below point of interest, back for the timing, okay? Price comes back into the area. Now, you've got to wait for the 5 minute candle to close, 840 and then 845, let it close. And then right on that transitional move on that next candle, you have to be ready going into those last 15 minutes of the hour to look for that transitional move to go back to get these shorts and get their cover, okay? And so to bring back what we talked about in the very beginning, okay? And to go over the 1 minute, area that we're about to, that basically the thumbnail of the video is off of, okay? So we're going to go over this 1 minute area and exactly what happened, okay? So we're going over where the sheep were. We're going to go over where the liquidity grab was. We're going to go over where the FOMO move happens and people basically get stuck, right? And then what we want to wait for based on price and time to get mitigation plays, okay? So going back to the middle screen here, when you're looking at that 1 minute, right, we'll go ahead and identify this. This was our area where sheep were, okay? This is where the double bottom was, overnight trades, this is before equities open, etc., okay? And so we have that, right? We have that identified. That's our sheep area. Now, when you go back and you look at this, okay, now we want to identify where's the liquidity grab of that sheep area, okay? Going back to the middle screen, the liquidity grab of the sheep area is going to be here. All right, so this is that liquidity grab, solid candle. Now look at the time, 8:33 to 8:34, and then 8:34 going into 8:35, right? And so people say, "Oh shit," and they don't want to miss right here, right at that liquidity grab, and they start to take that trade. Like I said, that's not a bad trade. Playing under old lows, under old liquidity, attacking back up to New York highs, sell side stop losses. Okay, so I love it. All right, that's a good move. Okay, now we have the liquidity grab, which is step 4. Now, step 5 is the markup. Step 5 is right here, okay? So what you're seeing essentially, and I've noticed this from watching trades myself over time, what you're seeing essentially here in this candle in this 1 minute that goes and takes its highs, this is creating so much FOMO, guys, because people are trying to enter. They're not entering where I'm saying, right? Inside demand, under old lows, alignment with whole levels, playing below points of interest. They're playing more like here on a 1 minute, and it breaks out and then stops them out. And they're like, damn, like the market hates me. Okay. But it's just like I said, because of their location. So we want to see this, like I said, this is going to be step 3 is finding the sheep, right? Step 4 is going to be the liquidity grab, which is the liquidity here at equities open. And then step 5, right? So going back over here again, step 5 is the markup. So I showed you guys the FOMO, the fear of missing out move. And then step 6, okay, is the break of structure, because this is the confirmation of price, right, that you need to start thinking, where am I going to place my risk, right? And is time going to line up? So as you guys see, this is basically step 6. So I'll go ahead and make it like this so that it aligns with the document. All right, so this is the break of structure that you're looking for. That's going to be on the top. All right. All right, this is that break of structure, right? So this happens here like 8:38 going into 8:39, like 8:40. And then we get the slow corrective move, 5 minute, 1 minute, back below what? New York open, point of interest, back into where? Right? The 1 minute demand candle, which is our focus area of entry. Okay, so when I put right here, entry focus candle, I'm focused on that 1 minute to frame that demand candle, and then I'm looking for the sign of strength, step 7, the mitigation inside the area. Okay. And so that's what you see here, okay? We have the area, we know where we want, and then we're extending it out to the future. Now, we ended up entering at 45 in those 808s, okay? So 45 right here at the bottom, and then 808s was here, okay? And then our target immediately from there was to get back above the shorts of the New York highs, okay? So looking at this, we're always thinking in probabilities, 1 to 3, 1 to 5. Entering from those 808s, okay? And then getting back up to the New York Open, a 1 to 3 would have produced, make sure that's the right one. 1 to 3 buy would have been here, getting back into the FEG on that 1 minute, and then getting above those highs was definitely a little bit over a 5R if you took those entries below New York Open, okay? And like I showed you guys, for example, I showed you there were definitely people that took that trade, right, under the New York Open, right? So for example, like right here, Josh, right, 750, we were talking a little bit earlier, he took that order, beautiful, 30,808, right in alignment, 3 contracts across the accounts, and then was targeting the same areas. Beautiful trade, okay? And so, going back to the screen, let's just go back and kind of cover what we looked at, okay? We found the sweep, which is step 3, right? We've seen the break of structure, which is something we wait on, that 5 minute, 1 minute, and then we wait for the slow corrective move back into step 7, okay? And so we've got the break structure, higher high, right? People getting trapped, slow corrective move. And now this is where it comes down to the timing, okay? When you get that slow corrective move, you want to be thinking first 15 minutes of the hour, last 15 minutes of the hour, okay? And then we come in here 8:40 to 8:45. Then you get 8:45 starts here to 8:50, and that's where that mitigation happens to go attack those highs. And so again, guys, this is beautiful. Fear of missing out move. You get the correction move, mitigation inside the area, timing under New York Open, and you have a clear target of New York shorts to deliver on your TP. Okay, so that was the position that we ended up taking today. I hope this breakdown helps you guys kind of see what we're looking for when it comes to those buy positions and the timing and context and things that we're looking for. So we'll be live tomorrow morning inside the Discord trading, taking these same RSV setups. And I'm trying to think if there's anything else that I could think of. I really just wanted to break down that and stay focused on that. So Appreciate you guys watching. You guys have a good rest of your night, and I'll see you guys tomorrow morning.